Hey learners, welcome back to Trade Tactics. In today's video, I'll teach you the correct way to draw trend lines and how to trade breakout patterns using trend lines. So, first of all, what are trend lines and breakout patterns? A trend line represents key levels in the stock or financial market that indicate price movements. Key levels are points where a stock either changes its movement or continues its trend. Now, when drawing a trend line, many people wonder which part of the candle should touch the trend line. The candle's high and low, its wick, or its body? The answer is, you should draw the trend line in a way that touches as many key levels as possible. Key levels are the points where the price or candle either moves up or down. Let's understand this with an example. In this chart, you can see the stock is in a downtrend, forming lower lows and lower highs as it moves downward. Since this is a downtrend, we'll draw the trend line above the candles. Here, we need to include as many key points as possible. For example, the high where the stock changed its trend, and the two lower highs where the price was rejected and continued its trend. Now we'll draw a trend line connecting these 3 points. It's that simple. Just remember, you need at least 3 key points to draw a trend line. If you have more than 3, that's even better, but it should not be less than 3. Let's look at another example. In this chart, you can see the stock is in a downtrend, forming lower lows and lower highs. Here, the key levels are the stock's high and 3 lower highs. Now, let's draw a trend line to touch as many key levels as possible. In this trend line, you'll notice that some candles touch the body, while others touch the high. This illustrates that the trend line should be drawn where it touches the maximum number of key levels. Now, let's look at an uptrend example. In this chart, you can see the stock is in an uptrend, forming higher highs and higher lows. Since this is an uptrend, we'll draw the trend line below the candles. Here, we've drawn a trend line touching the maximum key levels. Now, you might wonder why in a downtrend, we included the high along with the lower highs, but in an uptrend, we're not including the low. Isn't the low also a key level? The answer is, we need to draw the trend line using 3 key levels, whether they are 3 higher lows or 1 low and 2 higher lows. However, in certain situations, if we include the low, we might not achieve maximum touch points. So in this case, we've used 3 higher lows to draw the trend line. Let's see another example. In this chart, you can see the stock is in an uptrend, forming higher highs and higher lows. Here, we've drawn a trend line, but this time, we didn't include the low or 1 higher low. As I mentioned earlier, you must have at least 3 touch points when drawing a trend line. If, in this situation, we used these 2 points, we wouldn't get maximum touch points. So, I've drawn the trend line using 3 higher lows. Now you'll notice that this green candle broke the trend line. Does that mean the trend line is wrong? Let me clarify. A trend line is not a straight line, indicating that the price will strictly move up or down from that point. It represents a zone or a potential area, so 1 or 2 candles may appear above or below the trend line, which is absolutely fine. Now that we've learned how to draw a trend line, let's use it to identify breakout patterns. There are several types of breakout patterns, such as flags, rectangles, triangles, pennants, wedges, etc. We'll discuss each of these patterns one by one. Flag pattern. When, after a large movement, we see 2 parallel trend lines tilted downward, we call this a flag pattern. Let's look at this on a chart. Here, you'll notice a large movement in the stock. Now we draw 2 trend lines. One trend line is drawn above the candles with maximum touch points, like this. The second trend line is drawn below the candles, like this. Now, you might wonder why we drew another trend line below the candles when the price is moving downward. The answer is that the main trend line is the upper one, and the second trend line is drawn for pattern confirmation. Now we have a flag pattern. This is the flagpole, and this is the flag. For a flag pattern, 2 things are essential: a flagpole and 2 parallel trend lines, i.e., the flag. This is a bullish flag pattern. Rectangle pattern. The next pattern is the rectangle pattern. When the market becomes range-bound and the price moves within a range, we identify a level of support and resistance that are parallel to each other. Let's see an example. In this chart, you'll notice the market is moving sideways, neither going up nor down. With minimal movement, it has entered a range. Here, we draw a level of resistance with maximum touch points, like this, and a level of support below, like this. Now we have a rectangle pattern. In this situation, you need to wait for a breakout. If the candle breaks the resistance level, you can use MACD confirmation to buy. If the candle breaks the support level, you can use MACD confirmation to short. Pennant flag pattern. After a large movement, if the market consolidates and we identify two opposite trend lines during this consolidation period, we call this a pennant flag pattern. Let's see an example. Here, you'll notice a large movement in the stock, followed by consolidation. If we draw one trend line above the candles with maximum touch points, like this, and another trend line below the candles, like this, we get a pennant flag pattern. This is the flagpole, and this is the pennant. This pattern looks similar to the flag pattern we discussed earlier. Triangle pattern. When we identify a level of support and resistance with a trend line, we call this a triangle pattern. For example, in this chart, the stock is in a downtrend. We've drawn a trend line above the candles. Next, we draw a level of support below the candles, like this. Now, if you observe carefully, we have a triangle pattern. You can find other patterns as well. We'll cover the remaining patterns in the next video. Hopefully, you found this video informative. If you did, please like the video and subscribe to the channel. See you in the next video, and best of luck with your trading journey.